Chapter 9. Toward a World Central Bank. 1. The hidden objective. The banking crises of the past 3 centuries, culminating in the 2007 to 2008 collapse, were not random shocks but deliberate conditioning. Each panic, depression, and bailout has served to instill public desperation and normalize global solutions. Today, the whispered remedy is a world central bank, a supranational authority to regulate credit, issue currency, and dictate fiscal policies across nations. This body, ostensibly justified as stabilizer, would in reality cement the very concentration of power that crises were engineered to achieve. The sovereignty of states would be quietly annulled under the guise of economic necessity. Footnote. Financial chaos creates consent for centralized authority, disorder is the ladder for global bankers. 2. The mechanics of centralization. A world central bank would replicate the model of the Federal Reserve, but on a planetary scale. Its tools would include reserve requirements for national banks, issuance of a single global currency, whether digital or fiat, and debt restructuring programs tied to conditional compliance. International institutions, the IMF, BIS, and World Bank, already function as proto-organs, conducting stress tests and imposing austerity through structural adjustment. Sovereign debt crises become leverage. States too weak to resist are told that salvation lies in surrendering monetary autonomy. Footnote. Debt is the Trojan horse by which sovereignty is traded for stability. 3. The digital currency agenda. Central bank digital currencies, CBDCs, represent the technological linchpin of the new order. By replacing physical cash with programmable tokens, central banks would gain unprecedented control over spending, taxation, and even personal behavior. Expiry dates, negative interest rates, and algorithmic restrictions could be embedded in the code itself. The shift from private banking crises to algorithmic governance marks a qualitative leap in surveillance. Citizens cease to be clients of banks and become tenants of the financial algorithm. The cashless society is thus less about convenience and more about compliance. Footnote. CBDCs transform money from a medium of exchange into a tool of social engineering. 4. Prospects of resistance. Despite the machinery of centralization, history warns that financial empires collapse under their own weight. Popular rejection of usury, the emergence of state banking alternatives, and the persistence of gold and crypto as parallel stores of value offer points of resistance. Fertility collapse in developed nations further undermines the demographic base of globalist finance. If a world central bank is imposed, it may well inherit a host already too depleted to sustain it. The irony is stark, the pursuit of total control could leave the controllers with nothing left to control. Footnote. The global banker's dream risks becoming a nightmare of ruling over ruins.